Welcome to the podcast. I'm Eric Salzman, along with Kevin Doherty and Richie Bennett. And boys, we got a crisis brewing. This has become an emergency podcast, and let's talk a little about it. Right and we're going to tell you all about Blue Owl. It's called a business development company, a corporation, I guess, and they are a big private credit lender and fund. I'm sorry, and they got a bit of problem this morning, and actually a bit of a problem yesterday. So what happened? What transpired is that, and we'll also get into the software apocalypse, what's going on. But there's been a kind of run on the bank at Blue Owl where their investors wanted out. Normally, every quarter they allow for 5% of redemptions. So, and apparently that was being hit numerous times, and then this time a lot more than 5% wanted out. So they slammed the gate down, and they instead they are now going to sell. They're selling assets, so they're now selling some of these loans that they've got, and it's gotten really interesting with regards to the quality of their portfolio and really the quality of all the big guys, of Ares and KKR and Apollo, and kind of this disaster that we've been thinking about in private credit seems to be moving along.
Yeah, this is the guy, the Blue Owl guy, the CEO, was the guy when Jamie Dimon came out and said there's a lot of cockroaches. If you see one cockroach, there's a lot, referring to some bad loans with the auto parts place. There was, fraud, well, alleged fraud. And so Dimon came out and said, this probably not an isolated incident. And then the guy went after him,
Right.
like dropping F bombs and cursing and every time something like that happens, every time in my history in this business, there's more to that. So the old saying, act like you've been there before. Like, why did he have to say anything? Right.
Right.
If things were going well, what you do is you wait 6 months or 9 months. You don't comment on the cockroach thing. You make your dough, and then you come back to Jamie Dimon and say, I don't know where the cockroaches are, guy, but we just paid out X and we just returned Y, and everybody's happy here. So maybe you should get your head out of that bar on the 13th floor of your new building that nobody can get into because there's only 55 seats, I heard, and shut your mouth, right? Like that's what you do. But when you come out
Right.
immediately and say, he doesn't know what the hell he's talking about, like blah, 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 he's a banker. And then now this.
Yeah.
And now their
Yeah,
stock
he
is at,
comes out like this, right?
yeah, yeah. The stock's at $10. The ticker is OWL, OWL. But it's funny because the stock was at $15, like not yesterday or the day before, but a couple of weeks ago, right? So somebody somewhere has been sensing
Right.
these guys. So which means they've been calling around to
Yeah.
many investors to say, hey, we have some good loans for sale. And somebody goes, I wonder why they're selling the
Right.
loans. Oh, they need money. Oh, okay. Let's short that stock and don't buy those.
Right. Yep. Yeah, and what's really interesting about this is that, and we've talked about it before, of how each one of these large private equity firms have bought, whether it's Blackstone or it's KKR, Apollo, Ares, and these guys, Blue Owl, they all went and bought insurance companies, life companies, and also annuity providers. Like Apollo owns Athene, I think is the largest annuity provider on the planet. And what they do is, I think Kevin, you were saying this before, they will then move the assets offshore to their captive reinsurance company where there's a lot less regulation and capital requirements. And this is the stuff they buy. So in a way, it's almost like, I don't know if you call it self-dealing, but what I do know is that I don't think anybody has their hands around this from a regulatory point of view. And by moving themselves offshore, they're able to buy all it. They buy into private equity. They buy the CLOs, the stuff that funds a lot of private equity. So this is now coming home to roost. We think the fact that it's funny. They sold $1.4 billion of loans, and they say that they got 99.7, I think. They basically almost got par for the loans, which to me means one of two things. Either they're selling their win, right, which is what you normally do when you're having a liquidity event, and whatever's left over is going to be garbage, or maybe they sold, at a discount to the two pension funds, and who knows where did they sell the assets to the insurance company, right, to get to that 99.7. So either way is bad, right? But it's the beginning of something. And I know Mohammed El Arian was out, I think yesterday, and he said this is like this could be like the canary in the coal mine, and he compared it
Or
to in 2007. Right? Go ahead, Rich. Sorry.
I was going to say, or the second cockroach, right? So like that Jamie Dimon referred to, which is pretty funny, right? The fact
Right.
that he says the cockroach thing, and then the next time there's a cockroach problem, it's with the guy who yelled at him in the first place.
And the whole industry relies on uh, relies on liquidity staying very abundant. The companies that are taking out these loans, they're not paying them back when they come due. Most of them are rolling it. Now, if they have a more difficulty
Right.
rolling that credit, or what's in layman's terms, they're not paying back, they're borrowing again. And so they're going to have to borrow probably at a higher interest
Hmm.
rate because there isn't as much of this liquidity
Sure.
that has been very, very abundant going into this private credit over the last at least 6 years.
Hmm.
So it echoes of Bear Stearns funds in 2007
Yep.
when they ran
Seven.
into trouble,
Yeah.
and that was the first hint that something's really, really wrong.
Right. Yeah, and that was as we talked about on Racket with the Epstein. That was Epstein lost up $60 million on that on the right at the wrong time, and he took about a $60 million hit on those funds. But the other thing is that, and I saw this. This was in I think it was. Oh, I actually PitchBook. It's kind of cool. I get an email from PitchBook, and that thing costs a ton. But they give you like one article for free every morning, I guess. And that one they talked about. They were all about Blue Owl, and they were saying that 20% of Blue Owl's direct lending is to the software companies. And as we know, the software companies, they call it the software apocalypse. It doesn't matter what you do. Like they've just been getting pounded ever since this new Claude's latest version. It's large language model or chatbot came out. Anthropic makes Claude, and apparently ChatGPT has another one that's very similar, where all of a sudden everybody thinks that all these software companies are going to be replaced by AI. And I'm sure you guys could talk of this also, is that how the software companies, I think the ETF, it's called, I forget the name of the ETF, but it basically is the broad kind of software index is down, I think 22% year to date. And it's been getting pounded just after, like I'd say 2 or 3 weeks ago when this news came out.
Yeah, I as an aside, but kind of related, I saw Accenture, the big conglomerate. They they do software, they do auditing, tax. They had the CEO come out and say, "We are monitoring for the employees, the internal employees. We are monitoring your usage of our AI tools every day, and if you are not using them, you will be exited." That's a polite word
Wow.
for being whacked. But yeah, so I think at some point here, you definitely are throwing the baby out with the bathwater. Like every industry is going to get AI is going to take over everything. Like that's the
Right.
feeling now. Right? Finance, uh, building, uh, you know, everything is going to be AI dominant. But these software companies have like big hooks into a lot of these existing clients and have been around for a while, long enough where like the people like the systems. And I don't think right away can they just press a button and have the AI work their new systems. Although this thing from Accenture is kind of interesting because if that's a big corporation and they want people to basically train themselves to a system that's going to put them out of work, that
Hmm.
that's a tough thing. But I just I think it's a little overblown, but for places that are invested in, I don't think you buy the software businesses now right away. I mean, you have to, see and stick around a little bit to find out what's going on.
Yeah, I have a buddy who's really, he's a really good developer programmer and he's been following this very closely. And he's kind of semi-retired now, so he's been having a blast with AI and he can sit there and program and have AI do stuff for him and stuff. AI writes code for him and stuff like that. So he's really on top of this. And I asked him about it, and it's funny because I think Barron's right around the same, like literally he told me, he gave me advice and then I read Barron's and they basically said the same thing. And what he said was, look, what you need to do is think of AI as the brain, but then there's all the workflow that needs to be fed into, parsed, created, and then fed into the AI model for it to actually work. Otherwise, it's just sitting there as a model and there's nothing to feed it with. So he said, find the companies that are very, almost pick and shovel oriented, that you need them to get the data to pull things in the right way and put it into the model. And one of the companies that I looked up and Barron's recommended was ServiceNow. They're big. So in other words, look for those companies that their software manages the workflow and will work hand in hand with AI. So they're already starting to, bifurcate between the guys who are probably going to lose. And Richie, what you're talking about is the enterprise software. Yeah, so that's always been that's why the private credit guys and the private equity guys have been so involved is because Salesforce, all these ones that are these huge enterprise softwares, like a company can't just replace it overnight. It's they need it, and they need it, and it was a whole per seat. That's how it's valued is how many seats do you have in the company that are using our software, and that's how all this was valued. And the scary thing, back to the private credit and Blue Owl and the rest of them, was that a lot of these companies they were purchased at 2021 type valuations, which apparently were crazy before this software apocalypse started. They were talking about this, and Kevin, to your point, is when all of these guys need to refinance. Well, the loan to value, they're not going to get the same dough back that they got the last time unless they do it at a much, much higher rate, which I don't even think is possible because the valuations of these companies have dropped, these private companies have dropped dramatically. And that could be, that's kind of the cliff of refinancing. And all this was happening before the last 2 or 3 weeks when the software companies started getting hit. Now you add that to it, and it's a problem.
Yeah. I mean, like I said, it's not going to go away anytime soon, but I don't know that it's going to be as dominant as the world is saying. We'll see. We'll see. But these private equity guys and these private credit guys who are invested in these companies that might be losing, for sure, they're cooked. There's no way out of
Yeah.
that.
Yeah, and I mean, it's when you get to a point when you gotta sell, that's the problem. Because again, now you're selling these, and Kevin, that was to your point about liquidity, is now all of a sudden you're looking for liquidity with really a product that was not meant for it was not meant for broad liquidity. It was meant to be buy and hold and refinance or whatever, but not to go out in the open market when everyone knows you have to sell and sell. Because they'll sell it, but it ain't selling at par, I'll tell you that.
Yeah, and there's so many moving parts. One is obviously what's going to happen with interest rates, but what's going to happen with inflation. And everything points to AI, and especially when the AI and robotics revolution of autonomous labor really kicks off. This is so deflationary, and basically that just the companies will be able to cut costs. They'll be able to produce things for a fraction of the cost that they're doing today, and that obviously opens the door for central banks and governments to print a lot more money and to do fiscal spending to address some of the challenges that are going to be brought by this. It's going to, the people were worried how many months ago, 3, 4 months ago, like, oh my God, we might get a a bond market revolt because are these interest rates attractive? Well, in a world, if we get into a deflationary world, 4% on a 10-year bond, government bond, I mean, that's amazing. The people are going to buy that up down to 2%, 1.5%. And what impact is that going to
Right.
have? So many moving parts. I mean, if Rich has a little bit of hair, but Eric and I have already lost our hair. If we didn't, in the next few years, we would lose all our hair. Just uh, trying
Right.
to navigate the what feels like a time of real interesting chaos.
Yeah, the government's going to need to spend money because all of us will be out of a job. I mean, I,
Not everyone
I
can
mean
be a
that's like
podcaster.
Yeah.
that's right.
And
Or,
I'll go buy some Rogaine now on the cheap because
or write
if everybody's losing their
snarky
hair,
commentary.
the price of Rogaine will go way up high too if everybody's losing their
Yeah,
hair
Good
or
point.
whatever the
yeah.
There's our
Um,
hot tip of the week. Buy
yeah.
Rogaine
I
as an
mean, it's
AI play.
by Rogan. But
As part of the AI play.
everything is just happening. Everything is happening so much faster, and it's just like it seems like the gap between the same friend that was telling me about, kind of what to focus on, what finding the babies thrown out with the bathwater. Oh, also cybersecurity. That was another one that
Hmm.
Baron, I bought like three or four stocks at the CrowdStrike and Palo Alto Networks and a couple others that were kind of cybersecurity. And so far, following Barron's has done pretty well for me. So I'm going to keep doing that. But one thing that
Cybersecurity. Sorry, go ahead.
no, you go ahead.
Well, I was just going to say a good friend of mine is the founder of a cybersecurity insurance company, actually. And I was just with him a week ago, and we were discussing this. And he's saying with AI is absolutely makes the need for cybersecurity much greater for companies, for everybody, because the tools that the attackers are going to have access to are going to be increasing uh, through this AI development in a faster and more dangerous way than we've seen even to this point. And already companies struggle with cybersecurity attacks all the time, and that's only going to become a bigger problem.
Mm, yeah. Do you now? I don't know a lot about it, but I hear that when I hear the quantum computing, is that the like isn't that the end game where you get to but then like can't quantum computing figure out any password or any security system that is that part of it, so now AI can make that happen faster, that we get to quantum computing?
I think that's the risk. That's one of the risks that,
Hmm.
and I know it mainly from the cryptocurrency angle because that's been much talked about recently. That the quantum computing can break the passwords around Bitcoin wallets, and so open up, these if 20% of the Bitcoin wallets suddenly become breached, and then that could absolutely cause the price to crash down to you know nothing because these people are going to dump it and try and sell it and monetize the attack. But there are a lot of reasons why the 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 risk seems like it can be mitigated by changing the system design so that the things that quantum can do, it becomes more than just a computing power issue to secure the networks. But yeah, banks, utilities, air traffic control systems, in theory, are all vulnerable to some degree to all this. So I don't know. Maybe we should take our
Yeah.
monkey business podcast millions and buy a monkey business ranch out in Wyoming, and that's where we can be secure.
Mm.
You put a data center in.
And a Ford F-150 pickup for everybody. None of this autonomous cars because
Yeah, and
those
and a
Those can
older
be like
model,
those can be breached too.
none of the recent models, like a 2015
Right, right,
F-150. Yeah,
right.
with the gun rack.
Well, it's a good thing. It's a good thing that our enemies don't have access to those chips. Oh, wait, they do. I'm telling you, this is what I believe. This is one of the things that they brought up about giving Abu Dhabi those chips is that you lose control of them, and then the Chinese have them, and this is exactly the type of stuff that they. I mean, I'm sure we're working on the same thing, but it was a strategic advantage for us to have them and them not to have them, and now they've got them, and you know. We basically sold them for the price that the Trumps could take in half a billion dollars for their World Liberty Financial. Which, by the way, let's segue into crypto. Kevin, I know
Mm.
you have a couple of cool things to talk about, but also there was a big shindig in Mar-a-Lago, I think, last week that
Yeah, I
The
heard
Trumps
about
held.
that. I was not invited. So
Yeah, CZ was
I
there though.
yeah, I'm sure he was. Yeah, the big thing that happened, and unfortunately, it's not a bullish development, or at least the markets haven't taken it bullishly yet. But so BlackRock, which is the biggest asset management company in the world, they manage $13 trillion dollars. Um, they announced earlier this week that they are going to make their tokenized US Treasury fund. So they've been, like all these Wall Street firms, they have been dipping their toes into um, adopting blockchain and cryptocurrency technology to their business to make it more efficient, to make it more appealing. And so they set up a US Treasury fund that is tokenized. So think of like an ETF, a US government bond ETF that you can buy and sell on the stock exchanges. They created this government bond fund that is tokenized so it can be bought and sold by buying and selling the token for it. What they announced is that they're going to list this fund on or token on Uniswap. Now, Uniswap is the biggest decentralized exchange. So we've talked before about decentralized finance or DeFi. Uniswap is really the granddaddy of all of the DeFi protocols. It's the bluest of blue chips in the cryptocurrency land. It is where it has the biggest exchange. And so this is basically an automated exchange. Think of NASDAQ, but instead of 3,000 employees, it has 30 employees. And all of the trading that takes place is automated using computer code and smart contracts that are powered by blockchain and cryptocurrency. And so the bullish dream of decentralized finance is that these decentralized protocols will either replace or cohabitate with existing systems like the NASDAQ or the New York Stock Exchange. And you can think of Uniswap as the NASDAQ of the cryptocurrency world. So BlackRock announced this week, we're going to support it. We're going to put our bond fund that it'll be able to be traded on Uniswap. There are multiple varieties of Uniswap. The one they're going to use is permissioned. And so anybody who trades on it will have to go through a KYC protocol. Fine.
Know your
They
customer.
also announced at the same time so BlackRock is going to, as part of this, they're going to buy Uniswap tokens. So think of it there, it's like buying equity in NASDAQ. This should have been hugely bullish because this is for those who argue that the decentralized finance and these smart contract driven protocols that are built on top of Ethereum, for example, that this is the future of finance and this is the future of whatever else, social media. I mean, you can't ask for anything more. The biggest asset manager in the world is going to use the platform and is actually going to be buying tokens for itself, for its own investment in this bluest of blue chip protocols, Uniswap. So how did Uniswap react in the market? It traded up about 27% over the minutes after this was announced. And then over the next day, it fully retraced all of those gains. So this was just a quick trading pop, and then some holders said, "Nope, I'm using this liquidity to get out of this." And so Uniswap now is trading at about a $2 billion valuation. So the tokens trade about $3.40 right now. At their peak in 2021, when this decentralized finance really took off, it was trading at $43 per token. Or so think of it 43 per share. Now it's at 3 per share. It's down 93% from its all-time high. And we've just had BlackRock anoint it. You've got the Pope blessing this exchange, and the market does not care. So, one of the classic um, tells of a bear market is good news comes out. It doesn't matter. The price of that thing keeps dropping. Or alternatively, a raging bull market, bad news comes out about a company. Doesn't matter. The stock keeps going higher. Well, I mean, this is about as clear a case as you can imagine. It's showing that this just ruthless bear market in crypto. I mean, even though Bitcoin 4 months ago was at an all-time high before it entered its bear market, the rest of the space had really been struggling. And as I said, now Uniswap is trading at a lower price today than it was in the wake of the FTX collapse, and when
Hmm.
the whole crypto market got wiped out. So this is really it's either telling it's I think it's telling us one of two things. One, it's saying that this DeFi dream is just not what the boosters expected. Even though you've got BlackRock involved, even though the U.S. government is supportive, doesn't matter. The valuation is, it's just not worth much. And on the valuation side, so the Nasdaq, the holding company of Nasdaq trades at a $46 billion market cap. And to put that in context, Uniswap is at $2 billion. Um, so it's saying doesn't matter, or or this is an opportunity, and 3 years from now, people are going to look back and say, "Wow, in in this raging bear market, there was an opportunity here." I leave that up to each person to decide what they think is going to happen, but this is really something.
Kevin,
So
Uniswap. So is that trade on that? Is that an equity that we could buy?
It's a token.
A token.
So
Okay.
it
It's
trades
all
like
token.
Bitcoin or Ethereum or
I got you.
Solana. Um, but yeah, it's if you have a Coinbase account, you can buy it. It's like the 35th or 36th biggest by market cap token. Um, but that's more a reflection of just how out of favor DeFi has been. Because again, this is absolute core infrastructure for DeFi. It's the biggest decentralized exchange. It's been around the longest. It's never been hacked. I mean, this is, you can't get a cleaner expression of DeFi than Uniswap. And now Blackstone agrees, and the market does not care.
So, Kevin, I learned a lot just by what you were saying there, which is great. Do you feel like there's only guys like you that know this? So if JS Ragman, who likes to buy his Bitcoin or his Ethereum because he thinks that's the future, there's
Yeah,
probably no chance that, I don't know, 98% of these guys who are just retail investors, they don't know what you just said. I didn't know what you just said. Now I know. And now I'm like, I am leaning toward, hey, maybe that is a bullish thing, right? Like, why would I mean, BlackRock's got a lot of money, but I don't think they
yeah,
go into things because they want to lose money, right? Like,
that's
if
right.
they're blessing this, they looked around and they went, all right, this is cheap enough. it didn't happen yesterday, right? Like where they came up and said, "Hey, let's do this." So that thing's been on somebody's desk for about 9 months. They waited, and now like everything's still hitting the fan, and they go, "All right, this is the point. This is cheap enough. Let's go." Um, because it just seems strange, like you said. I mean that's a pretty bullish scenario, and why it would only pop for whatever half a day or a day the Uniswap market, and then drop.
Mhm.
That means Joe S. Ragman is not involved, right? He's not. He doesn't know what a Uniswap is. He knows
That's right.
what a Bitcoin is.
I, I think that's right. I think it really is just the people who are deep into the crypto markets who are aware of this. I mean, it's in a relentless bear market. It takes guts to, to go in and say, "Hey, I'm gonna buy this and just see how things evolve." At these levels, the way to think of it is it's liquid venture capital. So if this works, if Uniswap works, you're not buying it because you think it's going to go up 15% per annum. You're buying it because you think, hey, it's a $2 billion protocol that should be worth $20 billion.
Right,
So I'm going to buy it. And if I'm wrong, well, I'm really wrong. But if I'm right, there's, 10x venture style potential upside. So it's worth a punt. But nobody's punting. And I think, look, people like me, they already own it. So they're not buying more of it on the back of this
right,
announcement. And so where's the marginal buyer coming from? So far, it ain't coming, except for BlackRock. And they did not disclose how much they are buying, which is interesting. Could be $5 million worth, could be 50, who knows?
right.
It'd be great if they disclosed that at some point, but we don't know yet.
And usually it
Seems
takes
like
like
the market.
A Barron's or a Wall Street Journal or one of these um, media outlets to write something about this, right? Like
Yeah.
I think it's still, as we've talked about in the past, the overhang now still seems to be that that act that was turned down in Congress is now filtering out to the people, right? Like that was news that you had the day it was happening, but again, people don't. If you're just like, what's the price of Bitcoin today, right? You're not following that, and then as that seeped out, and then as it continued, right? So, like I was saying before, that Don Trump Jr. claimed today or yesterday, maybe in that meeting in Mar-a-Lago they had, that the banking system was such a scam that it forced our family into crypto. Like that's it. That was his statement. I think that stems from he thought this act was teed up and we were going to go off to the races in crypto, and now he's pissed that the banks like turned on him. Like they were like, yeah, we'll pass it, and then all of a sudden it's like no, and now it's having trouble. Like the crypto market is still like overhanging, and it continues, right? So they may,
Yeah.
all the stuff that's going on in the world, they may not vote on this act again for a long time, right? Like and just may
Yeah,
over.
I don't think they will. There have been meetings, and there was a meeting yesterday in the White House between the crypto people and banking industry people, where the White House is trying to knock their heads together and say, "Listen, we need to get something that you can all agree on."
Right,
And the banking industry recently they've actually gone back on what they had previously agreed to. So
right,
they're feeling like, "Hey, we don't have to, we don't have to do this." And so I don't think it's going to happen. I think that this Clarity Act, I think it's dead. The lobbyists who are getting paid to push it are saying, well, it could still work, but of course they're going to say that. Polymarket odds have shot way up recently. It's now, I was looking at earlier today, it was bouncing between 60 and 80% likelihood of passage this year, but it's only $100,000 market on
right,
Polymarket. So it's very easy to paint the tape. If
right.
you're one of these guys who's trying to, get people like, oh, it's 80%. Well, I guess we have to go along. Yeah, I think that's right. And when you think about what could cause the market to wake up and out of this bear market into a bull market, I would think the clarity market could do that, but I don't think it's very likely at all. I think it's dead because it's not
Yeah.
just about getting passed with the majority, as you know. It's got to get to 60 votes in the
Yeah.
Senate, and they don't have it because that means they've got to get
And you,
seven
Kevin,
Democrats, and they're not doing it.
you said this was like the last podcast we did was that perhaps the administration's lost the political capital that they had, let's say, in the summertime before
Yeah,
all this news came out about basically what World Liberty Financial was doing, how much money they were pocketing. And I come back to this last Abu Dhabi bombshell is like I think that I use it emboldened the bank lobby and it kind of took took that political capital where I think you had 78 it represent in the House you had 78 Democrats who voted for or voted for that version of the Clarity Act. And
right.
then now I don't think there's a Democrat that's standing up against it. They're not necessarily worried anymore that they're not the party of crypto, that they're the anti-crypto party, the way that they were able to be painted, the first 7, 8 months of 2020. So I think that's been a big it's been a big wrench that has been thrown into this whole thing.
Yeah, I think that's right. I miss a lot. You broke up a little bit, or I didn't hear the last bits, but I think what you said is right. It's just the momentum isn't there. The Democrats don't feel like they have to support this stuff, and so that's where we are.
Uh, well, in the
Okay.
just one little tidbit in the good news markets. Well, the equal weighted S&P 500. So not, it's the ticker that I like to use is RSP, Richard Sam Peter. Um, that is up, I think, let me look as of today. It's still like 6 to 6.5% year to date. So that takes the heavy weighted technology out of the picture, that ETF. It kind of equally weights all 500 companies. So that means that there's some kind of shift from tech, not into cash, but there's still people selling tech stocks and the like and buying defense, healthcare, the safer stocks. So it's still not, all gloom and doom for the world. But obviously international stocks are killing it, like absolutely killing it. So there's more movement there too. Like people are saying buy international, even though the US has killed it for the last, 15, 16 years versus those emerging markets and even the developed markets overseas. But those guys are starting to climb too. So
Well,
that's not.
the U.S. is growing a hell of a lot faster than Europe, for example. Now, a lot of that is related to this AI infrastructure trade, but but yeah, the the growth differentials are, I think, greater than they've been since at least pre-COVID.
Yeah. And also, I would be remiss to not congratulate you, Kevin, on your Super Bowl championship with the Seattle Seahawks. And I would be remiss to not congratulate all the people that listened to our predictions, which was not just Seattle, but the under in the total points. And that was a banner Super Bowl once again for the
Indeed.
Big Six. And
And
we can't,
I,
and we can't wait for March, where the March Madness starts in the college basketball, where we had a fine season again in the NFL and college football, but in years past, I would venture to say the college basketball predictions are even better than the
ooh,
college football and NFL.
I
So
like that. Well, I would say if anyone,
So
uh,
we've had three.
I would say if anyone made their Super Bowl bet on Polymarket and they're sitting on a little cash in their Polymarket account, in the next month before they put it on March Madness, you might take a look at that Clarity Act market. And, when it's trading at 70, 80 cents likelihood of it passing, that is a bet against that.
oh,
That is, That
All
that
right.
that would be my tip.
It's a pear straight.
Exactly.
Take Richie's. It's take Richie's basketball picks. We go long those. We go short. We go short the Clarity Act. It's a great pair straight.
It's great.
All right,
You
guys.
can win
Good
on both ends.
stuff. And we'll be back
All
next
right.
week. Bye.